Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A big episode to kick off the week for you. Anthony Power and I are going to be reviewing the top 4 deals we've seen in the sector, along with some notable mentions and companies we're keeping a close eye on. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're holding any of these 4 stocks and your top pick in the space. With that being said, let's get into today's video. All right, guys, away we go. Monday afternoon, another week of trading ahead of us. This is going to be an exciting episode. Anthony and I are actually going to be taking a look at the top 4 deals, so to speak, in the Bitcoin mining space, what's been signed in terms of HPC, AI, and CSP contracts, along with a few of the notable companies we're keeping an eye on currently. So a lot of data, a lot of analysis coming your way. Before we get into that, Bitcoin price itself, right in that $90,000 range. You can see a bit of a pullback coming into trading this morning. Anybody's guess where we'll end up towards the end of the week here?
Absolutely anybody's guess. And we say that every day on the podcast, Bryce. If you look at the Friday position, we were talking about the Bitcoin price as it dropped to like 88,000. We were hoping for an Asia pullback through, and they did on Sunday. The price started to rally. And when I woke up this morning in Asia, as I am at the moment, I'm in Thailand at the moment, the price got to 92,000. I'm thinking to myself, are we going to stay at 92,000? But America hadn't opened, and as soon as America's markets opened, we saw that pull back to about 90,000. So this is, it happens with regularity. Asia seems to pump the Bitcoin price up, and then all of a sudden America, it seems to drop down when you guys wake up over there. I don't know what you're doing with your breakfast, but you need to change your cereals maybe and start buying some Bitcoin instead of selling it, because we're not selling it over here in Asia at the moment.
No, quit selling the breakfast Bitcoin in the US, you guys. With that being said, the miners themselves, a bit of a mixed bag here today. You'll notice the 4 that we're going to be focused on, they're actually in the green. Again, we've talked about some of the strength once you get those contracts under your belt. There's some in the red, there's some in the middle. If you look at the daily range, though, Anthony, it does appear they've pulled back a little.
Yeah, they've again, when I looked in pre-market, and on certain exchanges, pre-market is literally just past midnight in the UK time. So that's how early the pre-market's open on a Monday morning. And again, it was a sea of green on my portfolio there. Literally all the miners are up. In fact, Bitfarms had a bit of a burst in pre-market. I think it was up as high as 5%. If you look at the price now, it's just under 2%. Lower than its Friday close price. So that's the sort of like where you can see a real change in the sort of like the pricing in a very short space of time. Nothing significant in terms of the drops, apart from ABTC's had another 10% pullback there. We remember obviously last week, then some of the founders were allowed to sell shares, and that happened quite significantly. The volume today is 14 million. That's higher than normal because now we've got more liquidity in terms of shares on the market. Prior to that, there wasn't many shares at all to be traded, and I think that's probably what helped get the share price really high at one point. But we're now seeing more shares on the market, and there's been a bit of a pullback today. But again, some of these shares are quite volatile, and we've got a sort of, as I say, a mixed bag today. So some are slightly in the green, and the majority is slightly in the red, with bar a couple of exceptions. But we'll start of the week, see what the week has to offer.
Now, one thing I will say, the theme of today's video is recapping some of the big deals in 2025. We're now only a few weeks away from the end of the year, but both of us do expect more deals to be signed in 2026. One of the companies we expect to see a deal from, Bitfarms, they actually just got upgraded to be included in the S&P composite index here in Canada. So this is about 3,500 companies. It's a fairly broad basket of stocks, Anthony, but we've talked about the fact that the inclusion in these indices very beneficial to the company, as it encourages regular automated buying from a lot of the pensions, the investment firms, and the individuals who really go after that kind of safe and steady approach.
Yeah, it will do. You're quite right. Even like you say, retail shareholders will look at that index, and it's it's the largest index in Canada, and it'll have the best performing or sort of by market capitalization the stocks on there. And Bitfarms will be well pleased to be part of that group today. Obviously, they're also part of the Nasdaq as well, so that's the bigger deal there. But this will help certainly for investors in Canada who sort of like you say have access to the trading over there and can sort of like buy that them stocks in a basket through their investment accounts. And Bitfarms is now going to be part of that. It'd be interesting to see what impact that has. But in early trades today, it was certainly up there. Whether it was on the strength of that news may well be, because it was significantly higher in pre-market than all the other mining stocks. And I was looking for a news update, and this was the only one I could see at the time. So maybe linked to that there, but it has pulled back since the American Open. So short-lived today for them.
Yeah, it is. December 22nd is the rotation date. So you're right. We may see some front running on that. However, we do expect big things from Bitfarms in 2026. Now, on that note, we've seen some big things happen in 2025 as well. So we wanted to kind of circle the wagons here, take a look at the big four, so to speak, in terms of companies that have already signed deals. Now, there are a lot of other companies that have some sort of a deal or in conversation, but as far as we've seen so far, these are the ones that have inked the contracts. They've got the hyperscaler, and we wanted to kind of talk about some of the intricacies or differences between these deals. Now, following that, you've put together one of your tables, Anthony, a lot of data here where we're going to stack these deals up head to head between the four companies and really talk about our opinion on who's the winner overall in the space right now. So kicking things off, alphabetical order here, we've got Cipher. Now you can see the headline from Bitcoin to big data inside Cipher's hyperscale power play. This is really the headline of the year for all of these miners. We've heard from a number of CEOs, power, megawatts, time to power is the bottleneck. The miners have that. We anticipate a lot of deals in 2026. Cipher's already come to the table with a number of deals in 25. There's rumors they may try and sneak another one in before the end of the year. But in terms of what we've seen so far from Cipher, the real storyline for me is the ability of the team to convert these projects start to finish. We've seen this multiple times now. And really the fact that they've now got a number of high profile tenants in their facilities with a large pipeline ahead of them.
Yeah, they have, and they've made the use of their two sites that are operating at the moment, the two largest sites there. That's the Black Pearl site and the Barber Lake site there. So both of these sites, 300 megawatts there. You're quite right in terms of 2025. They're one of the sort of like miners at the top of the table that have signed a number of deals. Remember, not too long ago in New York, back in September actually, and we were at the Cipher presentation provided by Tyler Page, the CEO, and he gave his update about, saying that they're in discussions with a number of potential clients, and he felt that he'd be able to at least name one client by the end of the year. Well, he didn't just name one client, he named two massive clients, but he also named four deals effectively. So rather than one deal going through, they've had four deals. And who knows, there's still another few weeks left of 2025. But I expect potentially maybe more deals to come for Cipher next year. Remember, they've got more power coming on 2026, 2027, 2028. So they've literally gave up all their sort of like current power in terms of those two big sites there, 600 megawatts. We can go very quickly to the deal with FluidStack, supported by Google. And when you've got the name of Google attached to any deal like we've had with other miners, you're naturally going to get that door open to start enabling you to raise enough capital to facilitate these deals. Now, the first deal that they signed with them was 168 megawatts of compute power, using up nearly all the capacity at Barber Lake. 244 megawatts of the 300 megawatts was used there. That left 56 megawatts, and we'll come back to that 56 megawatts in a second. Now, that contract was for 10 years. $3 billion contract there with potentially 2 5-year extensions. Remember, the majority of these co-location deals are for long periods. Generally, if you add up the extensions, you're looking at maybe 20, 22, 25 years these contracts are for. They're very, very in steady state once they've been agreed and signed off. And really, it's just then a case of as long as the contract's meeting the requirements, it's a sort of box ticking exercise. And the revenues, as we've seen there, 3 million over that initial 10-year period. So an extra 2 5-year extensions. You're looking at another 3 billion. Now these contracts will also have what they call multipliers in place, and that's to allow for the fact that things like inflation incurs. There'll also be obviously things like penalty clauses. So there'll be a payment mechanism as well to make sure that you're delivering the contract to a specification. And if you fail to achieve certain things, then that does impact on the revenues there. But we're not here to sort of like look at how miners are not going to impact these deals before they've even started these deals. But all that should be aware is that they do have them in place there. Now, when you're looking at the returns of some of these deals, they're significant in terms of net operating income, and this is effectively your net margin. So when we talk about mining, we hear the word a lot of time gross margin, and we talk about mining machines having revenue and the energy costs associated for that will leave you the gross margin. When you look at the net margin, that means all those other costs that are incurred in delivering that contract. So paying the staff, all the sort of like general and administrative costs there, the G&A costs there, any site costs. So all those costs together gives you effectively the net profit. What have you got left with? And on this particular deal here, the expected net margins achieved by Cipher Mining, 80 to 85%. Well, that's pretty awesome in terms of comparing that to what they're trying to achieve at Bitcoin mining at the moment. I would suggest maybe that would be a significant amount more. If any of the miners are getting anywhere near probably 10 to 15% net margin from mining at the moment, that would be a great time. But I doubt many are doing that. This lease date will start October 2026, and if you think about the sites now, these sites are going to be prepared to start taking in those GPUs, and also the fact that the power, for those sites that aren't available, that needs to be sourced as well. But for Barber Lake and for Blackpearl, that's not an issue. It's just really now the build out of these facilities. So they allow themselves best part of 12 months to do that. And knowing that Cipher Mining are a renowned data center builder, I think it's well within their remit, Bryce.
I think so as well. Now, you mentioned we'll leave those remaining 56 megawatts for a second. I wanted to get your take on another aspect here. So we've seen with Cipher, we've seen with a number of these miners, a long contract negotiation period for that initial foot in the door deal. Then we've seen a fairly fast follow in terms of the upsize. So in terms of that additional 56, I'll let you walk through who took that, and then maybe you can talk about this theme of upsize or rapid follow upsizing that we've seen.
Yeah, and on these deals, you're looking at 4, 5, 6 months of negotiations. These don't happen in a weekend, if that's what retail investors think when they have these conversations with, any particular clients. They're long-winded clients. We've heard from Patrick Fleury of TeraWulf how long they were in discussions for, and that's no different from all the other miners. They'll all be in long-term discussions because they'll be trying to agree the minute parts of these contracts, and everything has to be agreed and signed up. Nothing, as Tyler says, no agreement until it's signed and agreed. And he probably knew they were extremely close all through those discussions when he presented in New York, but he couldn't say anything because it hadn't been physically signed. And one thing they've done there is they've really gone to town on their subsequent deals, because once you've got that first one in operation, and they're very transparent, these mining companies have been putting their deals out there for everyone to see. So the length of the contract, the revenues associated, and effectively giving everybody an idea of what the next deal is going to look like. And they've had since that first deal, they've signed up to 4 deals. Now the 2 of the subsequent deals have been with the same fluid stack. So this is where it gets interesting now, is that remaining 56 that you mentioned and I highlighted earlier on, Bryce. it looks like Fluidstack have taken the whole site there at Barbara Lake. They've got the whole 300 megawatts to deliver just over 200. I think 207 megawatts in terms of compute power, and that's going to give them that extra 56 megawatts, delivering that 39 megawatts of compute power is going to give them an extra $830 million over the 10-year period. That's 83 million. And if you remember from our last podcast, Bryce, we were talking about DMG and their deal in Canada. If they had a deal there for their 65 megawatts, of which 50 would be compute, we were talking about probably 100 million a year. That figure wouldn't be that far away if they were able to attract a similar client that Cipher have managed to achieve.
Yeah, that's good. Good note there. Now, the other deal, obviously, the blockbuster here, Amazon Web Services. So this was another 300 megawatts, 5.5 billion worth of estimated contract value, 15-year base lease. With the lease starting in August of 2026. So again, next year. Now, we've talked about the AWS deal extensively on the channel. My question for you, Anthony, after the Fluidstack agreement and AWS, where does this leave Cipher in terms of power coming on in subsequent years?
Well, we know that they've already got 544 megawatts current available for the contracted hosting there. And they're going to energize a further 56 megawatts to finish that 600 in total. In 2026, there's a further 100 megawatts coming online, and then a further 70 megawatts in 2027. Then after that, it gets really interesting. They've got 2.5 gigawatts of power. Remember, we've got some of these other sites that they've options to purchase. And so a lot of power potentially coming online between 2028 and 2029. And then after 2029, they've got a further 500 megawatts. So effectively, Cipher are future-proofing themselves past these deals that we've seen at the moment now. And that's probably the way that most of these miners should be operating. Yes, you're going to deliver the first deal, but you're looking for the option then to start building out the next deals. And if you've got them options to buy and you've got to order long lead items for power on those sites, you're going to have to start doing that in advance of those sites becoming available. And therefore, it all ties into the timetable. But they've got potential there, another 3.1, 3.2 gigawatts of power on top of what they're going to be delivering to Fluidstack, Google, and Amazon for the current deals they've got.
You're right there. So for Cipher, the CORZ notes here, you guys, highly established or reputable data center building team, a tried and true model here that's able to rinse and repeat, multiple contracts, and a large pipeline, as you just said, coming online kind of staggered over the next few years. Now, the next one we want to talk about is Core Scientific. They really came out of the gate strong. I guess the claim to fame for them, first mover advantage and time to market. We talk about the contract negotiation length. Core Scientific already delivering revenues and looking to scale that rapidly as we move into 2026. So I'll let you go through their landmark deal. Maybe then we can talk about where they're at in terms of delivery.
Yeah, so 2024 was probably the year for CORZ Scientific in terms of announcing that initial deal, and we were fortunate to be there at Denton when they did that. 2024 was also the year that they came out of Chapter 11. So remember, we're only still less than 2 years from them coming out of Chapter 11, but they have at the moment the largest compute infrastructure deal of all the miners in place at the moment. 590 megawatts of compute power, utilizing 800 megawatts of gross power, to deliver that contract there. It's a $10.2 billion contract. If you're looking at the annual revenue, that's 850 million once all the revenues for all these sites are coming in. Now, they've already started to receive revenues for some of the facilities at Denton. That's already been refurbished and the machines are going in there. So the revenues are starting to come through. And by the end of this year, they're expecting to start having an annualized revenue for literally nearly half of the compute power in there. I think it's just about 250 megawatts. So nearly half of the 590 megawatts will be revenue by the end of 2025, and then the remaining will go through 2026 and early 2027, and then probably for 2027 full year and onwards, you're looking at close to 850 the first year, and certainly 850 the following year. Now, the anticipated profit margin on this deal, 75% to 80%. Again, very, very high margins. Remember, with the likes of the previous deal and this deal here, they're not buying GPUs. They're basically refurbishing the facility. And if you look at the benefit that Core Scientific had with this deal, as the first deal out there, they were able to get CoreWeave to give them an advance of 750 million to pay for the first 520 megawatts of effectively refurbished buildings. The final 70 megawatts, Core Scientific agreed for that one to pay themselves, and that's a total of $104 million. So in total, about $854 million in refurbishment costs for the actual facilities. I don't know if there's any more cost in accordance with like cooling systems or anything like that in place, but those are the only costs I could find in their update. So 854 million. It works out about 1.5 million megawatt, which is actually significantly less than the three other miners we're talking about, and we'll come on to those maybe at the end of the conversation. We go through the actual comparison page there, but they're managing to do it on less of a budget than the other ones there. But it's in terms of a deal, this is probably the best deal on the market at the moment. It was the first deal out there. Everyone gets to see the first deal, and then they sort of like try and go in and judge accordingly. One thing I will say, unlike the first deal that we saw with Cipher, Core Scientific didn't have to give any away of the stock with CoreWeave, and so that's also a positive position to be in. You're not having to give any dilution of your stock to do with that. However, you speak to Patrick and you speak to Tyler, and when you've got the name of Google or Amazon, when you're going to the banks and asking to lend money, it does help with the interest rates. You have a hyperscaler supporting you, and the rates we've seen already from some of the money that these companies have been able to raise to deliver these contracts. The interest rates have been significantly lower than normal. That's because you're having the backing of these big hyperscalers.
Now, I'm glad you brought up CoreWeave in the conversation. We were waiting on the CoreWeave merger vote or acquisition vote for most of this year. That obviously did not go through. So we anticipate some big announcements or news out from Core Scientific in the new year. We know they have an extensive pipeline over and above what CoreWeave has been given. The final piece I wanted to talk about here, you mentioned we were down in Denton in 2024. They've actually got some site construction photos, Anthony. It looks completely different. We were down there thinking these were state-of-the-art data center buildings. They said, oh no, we're going to be taking those down. We're going to be starting from ground here. You can see how quickly they've advanced these sites. But when you talk about the value of infrastructure and the value of or speed to market, power to market, again, Core Scientific, the clear first mover here.
Absolutely. And that Denton facility that we visited last year was a 150 megawatt site. Now it's been increased to 260 megawatts to deliver this part of this 590 compute deal with CoreWeave there. So a bigger site. The building renderings there look, amazing, and you're quite right. We were struggling to see how much would they need to do. But that's, if you're building good data centers, and we've heard this from discussions with IREN, and other companies, where you're building a good initial data center, then there's less of a refurbishment required because them data centers can tend to be converted without too much cost. You don't have to maybe knock them all down and start again. We certainly think at Corsicana, if you're having to convert maybe buildings A1, A2 and B1 and B2 there, maybe they'd be able to utilize some of the buildings there because they look again like really, really good, strong buildings. Remember, it's not the building, it's what's inside the building that needs to be, at a certain level. So the cooling systems, that's where the expenses incurred, maybe not as much on the actual external build. But I do like the renderings there that Core Scientific have included in the presentation. It looks like they're going to be delivering some really, really high quality buildings there.
Yeah, full steam ahead for Core Scientific. Now, you just mentioned IREN. This is an interesting deal. When you start to look at the numbers, very different than what we've just talked about in terms of some of these co-location deals. So you'll notice a shorter duration, a 5-year term as opposed to 10, 15, 20-year term, more aligned with the GPU depreciation or CapEx cycle as opposed to the infrastructure. What you'll also notice is the cost per megawatt for IREN considerably higher than some of these other miners, and they actually attribute $2 million per megawatt to an acceleration payment, which speaks exactly to that last point about speed to market or time to power. So I'll let you walk through the IREN deal as well, Anthony, but this one, in terms of first mover, this is really the first large scale CSP deal we've seen in the space.
Yeah, and this was a obviously a different type of deal than we've been used to. This was the first time when the miners have got in there and literally were going to build the actual data center, but they're also going to purchase the GPUs that go in the data center. So then we're going to be contracting our power and compute power to a third party for their services then, and so you're taking on all that sort of like the risk there. Now the benefits of the deal straight away is the fact that over that 5 years, the revenues are going to be around about 9.7 billion. That's 1.9 billion for each of the years there. So an enormous amount of revenue over a shorter period. The actual machines themselves, the GPU capex is 5.8 billion. Now, the benefit that IREN have managed to negotiate is that Microsoft are going to give them an advance of that of 1.9 billion, and then IREN will repay that during that 5-year period there. So that will help source the funds. I mean, if they're going to the market and trying to achieve loans for the 5.8 billion, you're paying interest on that there. So effectively, a 1.9 interest-free loan from Microsoft, that's going to help them. And IREN have already started the process of raising more capital in terms of updating their recent convertible notes and having significant cash from their cash flow from having probably the best mining operation of all the miners. That's certainly helped them over the last 12 months. They have over $1 billion in the actual bank as at their last reporting date, which was the 30th of September. So already a significant amount of the money required to start delivering this project for that 200 megawatts of compute power at Childress, a site that we were recently at just literally 3 weeks ago. Everything looks like all steam ahead for them to get this there. Now, from their position, building these facilities, they're building really high quality facilities. Their expectation is that the facilities will last a minimum of 20 years. So when you think about the build cost for those facilities, the 3 billion it's going to cost to complete Horizon 1, Horizon 2, that's going to, last at least 20 years. So not 5 years in terms of the life expectancy of the GPUs. Although we are seeing from some initial studies now that some of the initial GPUs, the A100s or the H100s, are lasting longer than the 5 years. So maybe, that there's, an opportunity to get even more profit from using the machines past their 5-year date. Obviously time will tell on that. We're still very, very early days. I mean, the machines aren't even installed yet, and we're talking about exceeding 5 years. So we won't play too much on that there. But overall, this is a different type of deal. It's not one of those that's going to deliver the type of return initially from what we've seen from the co-location deals. But at the end of the day, the destiny of IREN is within their own hands with these types of deals. And if you think, they're taking the place of effectively, a CoreWeave client who's sourcing power in a site and then delivering the GPUs. IREN are doing the sort of like the CoreWeave part as well. So if CoreWeave are thinking they can make money out of these deals, I'm sure that IREN will be able to do the same. And if you think about it, Bryce, having gone to that Childress site and witnessed what they're doing there in terms of Horizon 1, 2, 3, and 4 to meet this initial contract. They've also got another 450 megawatts at the Childress site, which is currently utilising their mining operation.
Yeah, I was going to say it was pretty impressive being down there. That's going to be a question mark for IREN is what happens with that additional Bitcoin mining activity. We talked earlier about the fact that we've seen a lot of these deals upsize or expand the initial contract. You and I both would bet that Microsoft probably does something similar with IREN, which begs the question, okay, where do the Bitcoin miners go? But as we start to zoom out, we talk about pipeline. I guess for me, the vertical integration, one key differentiator, the pipeline of IREN, the second differentiator. If you look at even what they have allocated now for these contracts on the CSP side and the Bitcoin mining, they've still got a considerable amount of megawatts coming online, guaranteed power over the next few years.
Oh, absolutely. And even looking at even if you disregard Sweetwater at the moment and just look at what they have from Prince George, Childress, Mackenzie, and Canal Flats, they're aiming by the end of next year, that's by the end of 2026, to have 140,000 GPUs in place, delivering 3.4 billion in annualized run rate revenue. 3.4 billion from literally probably about 16% of their power. Now, remember, the other 84% is at their Sweetwater 1 and 2 sites there. And you can bet your bottom dollar that next year we'll start hearing maybe some updates regarding those two sites because, as we're aware, Sweetwater 1 comes online, energized in April 2026, and Sweetwater 2 will come online in April 2027. So, two sites there that will be powered up in the next 18 months. And not mentioned in this run rate by the end of next year, it gives them lots and lots of opportunity to significantly have an enormous amount of annualized revenue. And when you compare that to what they're delivering at the moment, remember, as a Bitcoin miner, they're probably just about getting to that $1 billion a year now Bitcoin mining. And we're sort of saying in 2026, that $1 billion for 2025 could be $3.4 billion delivering HPC. And that figure there doesn't include what they're going to do with the mining machines that are at the Childress site. So lots of opportunity, lots of speculation, but certainly the future looks bright for IREN.
Certainly does. Those numbers get pretty big pretty quick, as you say there, Anthony. Now, TeraWulf's the final of the big four deals here. Similar to Cipher in my mind, in the sense that they've got a tried and true method. They're kind of on rinse and repeat. They've got a number of different contracts in place. We saw the Core 42, subsidiary of G42, then the Fluid Stack Google deal. Again, with this company, they have a real advantage in terms of time to market. They also operate in some different geographic locations. We'll talk about the PUE impacts of that in a second, but another management team that seems to really have a good grasp on the entire process and how to get these deals inked.
Yeah, and the expertise within TeraWulf is predominantly around the power. That's where the team come from. They're all power. Even the likes of the CFO Patrick Fleury, he was in the sort of like involved in the power many years ago. I think 20 years he's been involved in that sort of thing there from the sell side of in one of the big investment banks, and worked alongside the team at TeraWulf for a long time. So he knows the team inside out. Then he joined them as a CFO, and he's been intricate into negotiating these deals and explaining the deals at a number of presentations, a number of events over the last sort of 12 months. But they've, like Cipher, had a fantastic 2025 in announcing a number of deals. That first deal with Core 42, the 60 megawatt deal there, which is coming online this year and completing in 2026. They've got a big deal with Fluid Stack to deliver 366 megawatts of contracted power to them, and that expected to be online next year as well. So 2026 is a big year. And then more recently, they signed their joint venture deal in Abernathy, again with Fluid Stack and Google, and their portion of that is 84 megawatts. Now, when you add all this together in terms of compute power, we're looking at about 510 megawatts of compute power. So again, not the largest, but certainly anything over 500 is certainly worth standing up and telling the world about, because only Core Scientific has got a bigger deal at the moment than that there. And there's nothing to stop the likes of TeraWulf gaining further advantages as they go forward in terms of the power they've still got to come online.
I'm glad you brought up the JV status there, because that's a nice segue into this next chart. So you've taken all of the data we just talked about, all these various deals, you've summarized it into one table, Anthony. As you can see, the total megawatts for TeraWulf, 510, so second only to Core Scientific. You've taken into consideration the joint venture in these calculations, but this is a perfect table for people that are trying to maybe compare, contrast, analyze what's in the market so far. Can you walk us through what you put together and then some of the key areas people may want to look at?
Yeah, I mean, it's fairly self-explanatory. We've got some of the initial terms there, the deals there, where a company's got more than one deal. I've articulated there's two deals there for Cipher Mining in terms of the first one, a 10-year deal, then a 15-year deal with Amazon. Core Scientific, their deals all stretch over the 12 years. IREN, we know, is a 5-year deal. There's a CSP deal there. That's the length of the GPUs. And with TeraWulf, again, they've got two different deals there. They've got the Core 42 deal, and then they've got the deals with Fluidstack. And they've got the joint venture deal, the most recent one, which is the 25-year joint venture deal there, 84 megawatts each in that deal there, sort of compute power. So looking at the total megawatts across the board there, Cipher Mining, we've already articulated, using up those two sites, Black Pearl and the Barber Lake site there, 600 megawatts. Core Scientific's total, only 800 megawatts in terms of that there, and IREN 300 megawatts at the Childress site, and TeraWulf 642.5 megawatts total power there. The critical IT is what they're going to start getting the money for in terms of the contract. So Cipher Mining, critical IT low 407. We've already told you what Core Scientific is, 509, so that's the biggest deal. IREN's 200 there at Childress, and TeraWulf's total, just accounting for their own elements of that JV, is 510. Now, Bryce, the PUE is important. Can you give us just a rundown on what the PU actually means?
I sure can. Yeah, Ben Gagnon came on. He said not all megawatts are created equally. Now, the PUE stands for power usage effectiveness. This is basically the ancillary power that supports the critical IT. So think about things like cooling, like security, like the lighting in the buildings. This obviously they may not get paid for in the contract, but it's critical to delivering that contract. Now, you'll notice they range anywhere. We've seen online anywhere from 1.1 to 1.5 in these four specific deals, in the 1.3 to 1.5 range. This effectively is how efficiently you can use your megawatts. And we tend to see the further north you go, the lower this number, as you don't have as much cooling expense. So we said on the TeraWulf slide that they had a real competitive advantage based on that northeastern kind of exposure in their portfolio. And you can see here, TeraWulf actually coming in with the best PUE as well.
Yeah, TeraWulf have, because of that most of their sites, in northern states of the US, it's really cooler weather helps them. Core Scientific also have a lot of sites in the north of the US there. Cipher Mining and IREN both have sites in Texas, and there it's a higher PUE because there's more power required for cooling in those areas there. But this is end of the day, a lot of the data centers are going to be built in the Texas area, because it's not just about PUE, it's about where you can get access to the power. And in that state at the moment, not just from a Bitcoin mining perspective, where they've probably got maybe 20% of the global hash rate in Texas alone, you're going to see a significant percentage of the global HPC data centers also in Texas compared to other states as well, because of that power available.
Yeah, that's exactly right. Now, as we continue to move through the list here, another few that stand out for me is the cost per megawatt. You talked about the fact that IREN a little bit higher than the rest of the batch here. They've actually got that accelerator payment in there. Another one that stands out is the Core Scientific at 1.5 million. So this again, we see a large range between these deals.
Yeah, we do, but it's what you've got to be careful of is the deals have different timelines. What we need to do is a bit more further analysis on megawatts per year per revenue and see what we come out there. But when you look at the expected site net operating margins, that's where it gets really interesting there. And you can see from the three co-location deals, they're all sort of around that sort of 80% mark. If you look at the midpoints there, 80 to 85 for Cipher, Core Scientific 71 to 80%, and TeraWulf 85%. Now, I would imagine that in terms of interest on some of the loans that Cipher and TeraWulf are going to take out to cover the payments of theirs, that will probably feed into the margins there and maybe reduce that. And Core Scientific are getting that sort of interest-free loan from likes of CoreWeave to help deliver that refurbishment. So only having to pay a fraction of the amount themselves there for the actual infrastructure. So, but still exceptionally good percentage rates across the board. Now with IREN, they've only provided their EBITDA. I've seen a lot of numbers on social media suggesting that the actual if you're looking at a net operating margin, that could be sort of in the sort of 14 to 16% range. They are taking on this deal themselves. You once you buy these GPUs and you're going to spend 5.8 billion, the EBITDA figure doesn't include depreciation, so it's not including the fact they're having to buy these machines. You start depreciating these machines over the 5 years of their life, you're at 1.9. Sorry, you're at one point. If you start depreciating these machines over the life, you're probably close to 1.2 billion per year in terms of depreciation. So that's going to impact significantly on top of all the other costs they're going to have to find. So we'll pay close attention to the next updates from Myra and see if we can get any more understanding to sort of like how they're comparable in terms of that net operating margin. The interesting thing with all these miners, they'll always try to give you certain numbers and metrics, and none of them seem to correlate against peers. So you have to start sort of driving in and going down a bit further to try and get to the actual answers there. We with Cipher's last deal, they sort of highlighted a 300 megawatt deal with Amazon, and actually it's a 200 compute megawatt deal requiring 300 megawatts, so 100 megawatts of ancillary power. You've got to then sort of like work out that because their previous deals they were highlighting the compute element. So you just got to be cautious when they do their updates to make sure that you're talking the same compute power, total power, and PUE. That's why we've included all three of those elements in this sort of comparison chart. So it's easy if you're there. The only thing I will say is if you look at the final line there, estimated project cost, look at Cipher, IREN, and TeraWulf, all significantly higher than Core Scientific. So here's the thing. We know the building's probably going to cost about that 1.5 million per megawatt, but we don't know about the internal infrastructure. Are they providing cooling facilities for these GPUs to go in? Who's going to pay that cost? Is that part of Core Scientific to deliver? Because I know that Cipher and TeraWulf will be, they're fitting out really high quality facilities. So we'll probably wait to see if Core Scientific can come on the podcast and give us a bit more update as to how that number is going to increase, or who takes the risk of that on there. Does that go to CoreWeave in terms of having to deliver the infrastructure internally for their GPUs to go in, or will Core Scientific be required to do that? And at what cost to them will it be?
Yeah, good discussion there. The final line that stood out to me, the equity stake, you can see two companies have given equity, two companies have not. We heard from both that did, Cipher and TeraWulf. This is obviously a strategic move to increase opportunity down the road or levers to finance or loan money for these projects, better interest rates associated with these high profile investors in the company. However, Core Scientific IREN also got fairly high profile investors and did not have to give up equity. So this one, again, part of the deal structure we're seeing here, but notable nonetheless.
Yeah, we've heard from other CEOs that they wouldn't be adverse to giving away an equity stake if it was the right customer. I mean, you're going to get someone like a Microsoft or a Google or Amazon and a hyperscaler goes in there and they want an equity stake there, and that's part of the negotiation. You've got to think, what does that do to the deal itself? Does that enable you to get cheaper opportunity in terms of financing costs? And listening to Patrick and to Tyler from Cipher, they've both said that this has opened so many doors for them, and the fact that they're now negotiating interest rates that are significantly lower than they were originally planning for, and they'll get the payback on that equity stake there. Plus, what it also does is it means that Google's ideals are in line with Cipher's. So, they're motivated to make sure that Cipher and TeraWulf also get to do this service really well, because they'll benefit from the actual share price. If you've got a 5 and a 14% retrospective of these companies, you want the company to do well. And so, you'll be supporting the company to get as much, as much on the table as possible in terms of delivery, because you'll benefit from that. So I think it's a sort of like a win-win. It's aligning the goals of both, the hyperscaler and of the data center company that, in this example, Cipher and TeraWulf. So it's positives. I know that the other companies will be quickly saying we didn't give anything away from our deal, but at the end of the day, the proof will really be out there when we start seeing these real margins coming through. Give it a couple of years and we start seeing the margins coming through from actually delivering the deals, and then go back to this table and say, how close to those figures did you actually achieve? And let's see how much that real cost impacted the deal itself, or gave them such a good leg up in terms of opening those doors that we anticipate.
The $1 million, or maybe in this case, $1 billion question. Now, that's a good segue to our final section here on Luxor. We've talked a lot about HPC AI deals. We know that the Bitcoin miners are looking for more stable long-term revenue. Another way to achieve that is through actually buying and selling forward hash rate. So we've had the team from Luxor on. They've talked to us about the hash rate index, the forward hash rate curve. Last month, Con actually came on and introduced their energy management trading platform as well. Now, what's exciting this week, there's another big announcement on the horizon. We're going to be covering that tomorrow. And then we've got a member of the team on this Friday to talk through it. So Luxor, again, offering a lot of products really complementary to this transition we're seeing in the Bitcoin mining space.
Yeah, they are covering the bases here, and it's quite surprising when we listen to Lux and the products there. This should be appealing to a lot of the miners in the space there regarding to reducing any of the risks associated with Bitcoin mining. It's a very challenging industry with a lot of unknowns in terms of things like hash price, in terms of power costs, in terms of curtailment. There's so many unknowns out there, and there are means and ways, there are financial instruments to help mining companies, and also even smaller companies, in maybe individual people who have machines, whatever like that, is to look at how you can sort of mitigate some of the risk going forward. And the likes of Luxor, have a shelf full of products there that are starting to meet all those requirements. They've been an advocate of this all the way through since I've been covering the mining stocks there. So another great opportunity for miners to reduce that risk by looking at some of these financial instruments.
Certainly is. So let us know in the comment section below, you guys, out of these 4 big deals we've seen so far, which one do you like the most and why? In addition to that, who do you expect to sign subsequent deals as we move into 2026? We'd be curious to know your thoughts in the comment section below. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.